Hey everybody, I'm Molly Wood from CNET.com here at South by Southwest 2012. We are at the Second Market Recovery House, which is actually the brainchild of this man right here.
Yeah, we're joined here today with Barry Silbert. He's the founder and CEO of Second Market. Now, when we first heard of Second Market, the company, we know of it kind of as the company where people with, let's say, private shares in Facebook are exchanging them. So can you kind of explain? That's all. Honestly, that's what you guys are, kind of recognized and brought up to the forefront with. But can you kind of explain all that and other things that Second Market does?
Yeah, of course. So we're creating the next growth market, the next NASDAQ. We're creating the marketplace where all the fast-growing startups spend some time, a number of years, before they ultimately go public, or as an alternative to going public. Going public nowadays, it's really tough. You got to be a billion-dollar company. Which I got to tell you, it's hard to build a billion-dollar company. So we're creating that spring training, that bridge, to get companies to that stage where they can allow the employees to sell some stock at the right time. They can maybe raise some money. And there's a real need for this. And so we've had over $1 billion in transactions across about 50 companies so far.
That's interesting. I like what you say about, or I'm interested in what you said about if companies are not going to go public. So you could actually allow a private company to have stock options that are worth something to employees through private investors?
Right. I mean, imagine that. Imagine these options that we get, instead of it being a lottery ticket, actually having some real value. Because now it takes like 10 years to go public. Think about that, 10 years to go public. No one plans to stay at a company for 10 years. Bad for angel investors, bad for venture capitalists. And so we're creating this interim step to give companies at least the ability to be able to go public, or maybe as an alternative.
So one of the things that we think about when we hear that also, though, is that does this more benefit, I guess, the employees and people that have the money to invest in these shares? Because at the moment, this is not something that like someone like myself could jump in and say, I like to buy some shares of like someone from a startup company right now, right?
Yeah, well, so we're regulated, so we have to comply with the SEC rules. And so the SEC rules say to be able to buy the stock, you have to be like a high net worth investor. I would love to see that change, and I want to make that change hopefully in the next few years, but for now it is limited to high net worth investors. But anybody can sell, whether you're a rich person or just out of school. If you have the private stock, you can sell to us.
Right, but so it's not for us.
Right now,
we're out.
Because otherwise, it would be a public thing, which is not the purpose that you're trying to serve.
Yeah,
right?
The SEC wants to protect kind of the unsophisticated investors. Now, why they tie net worth to sophistication, I don't know, but that's the SEC rule.
Okay. I'm really smart. I'm just kind of broke right now. But really, it sounds like in some ways, at least for those companies that are going to stay private, it's just a way for them to do maybe better venture capital raising in a way that can also benefit employees?
Well, it's great for employees because it means that you can actually get some value. It's really good for the companies from a raising money perspective, because being able to tell potential investors, hey, you don't have to wait 5, 7, 10 years to get out. You maybe only have to wait 1 year or 2 years. That helps companies raise money more efficiently and definitely at a better valuation.
But what does it do in terms of taking stock off the market for a company that is going to go public? Like, does somebody already own all the good Facebook stock at all the good prices? I mean, okay, I'm not going to be naive. I know that's already true. But do you make it worse?
Well, think of it this way. Actually, I think we make it a lot better, because what happens over the growth of a company is you have some early investors that want to get out who would sell at the IPO or soon after the company goes public. But what we're doing is we're helping companies transition those early stage guys off the cap table and bring in new longer-term investors who will not just hold in the IPO, but buy after the company goes public. So we're actually taking a lot of kind of the supply off the market and bringing in value-add investors.
It sounds like that because Facebook is the extreme case, you're really trying to serve more of the startup community, but because Facebook just recently went IPO, that's the name that's associated with
Right.
Second
I mean, that was
Market,
definitely
right?
like the catalyst. That kind of generated a lot of buzz. But we have 20,000 companies profiled on Second Market right now. And the thing that we're actually announcing today, we're rolling out today, is we're allowing all those companies to claim their presence on Second Market, get themselves noticed in the investment community. So whether they want to raise money or do some type of secondary liquidity, they can now have a showing to the investor public.
So you've already created these profiles of companies. How do you create the profiles of companies you think look promising?
Yeah, so companies request it, so it's really easy to go on there. It's free. You say, hey, create a profile for me. Or if they've done a round of financing, whether it's angel or Series A, we've probably created a profile for them already.
Okay, and then they can go in and say, hey, that's me.
That's me. And then what's really cool about it is it's a way for you to basically attract and track investor interest. So even if you're not raising money, it's kind of like your profile to the investing community, because we have 100,000 investors investors on the system that want to invest in just these types of companies.
So you're like half LinkedIn, half NASDAQ.
Yeah, absolutely, absolutely.
It's good. It's good.
Okay, I got it. I finally get it. Do you see a future though in which a lot of startups, because it used to be, at least in the boom, that going public was the holy grail for a startup.
Not anymore, yeah.
And do you see a future when the majority of startups don't try to do that?
I think at some point in the future, there's not going to be a difference between public and private. And there really shouldn't be. What it's going to be is there's going to be different marketplaces where second market, we're all about being company friendly. We're all about giving companies complete control over how their stock trades. So on second market, you decide when your market's open. Might be once a year. You get to decide who's allowed to buy. And you disclose information, but it's only to people you approve. So you're not like having to file all of your secrets into the public.
See, now, but there's a check and balance built in filing your secrets to the public, right? So that shareholder relationship creates a fiduciary responsibility, it creates transparency.
Right.
I mean, do you see any downside in companies being able to keep all the secrets they want?
We're all about trust and transparency, and so we require information to be disclosed, but just because we're not disclosing it to the whole world doesn't mean that it's not all the material information. I mean, companies have to file these long 10Ks, 10Qs, all these filings that no one actually really even reads. It really is trying to protect the unsophisticated investor.
Oh, but journalists and investors and regulators read that information.
Right.
Like you said, you're regulated by the SEC,
Yes.
right? So the SEC still has access to all of the same information?
Absolutely, yeah.
Okay, and then like if I did a Freedom of Information Act request, I would still be able to get this information on a company?
Give it a shot, I don't know.
I think I will. I mean, we're for as much transparency as possible, so
Absolutely.
it's kind of interesting. One of the exciting things about Facebook going public for a lot of users was, okay, now we get to look behind the curtain.
Yeah. Well, I think the problem is companies should not go public until they're mature, until the business model is mature. And what you see is companies used to be able to go public when they were much younger. The public markets liked those types of companies, but today, I mean, you look at some of the companies that have gone public, they've been destroyed in the public market. It's very much a casino now. It's high frequency trading. It's people short selling. It's something that I don't want to be a part of as a CEO. So I want to keep my company private, and most entrepreneurs I know want to do that as well.
Yeah,
Now,
that seems very reasonable.
I know you guys are kind of go beyond this. You have some other projects like investing in local banks and whatnot, right? Helping them out as well, right?
Yeah.
So what we've done is we've created this, as I mentioned before, this very large network of investors. So 100,000 investors that want to invest in unique investments. So what you're going to start seeing from Second Market, actually very, very soon, is we're going to start making available to all these investors unique investment opportunities, things ranging from special fund vehicles that allow you to invest in certain types of private companies, to real estate investments, to fixed income investments, stuff that you just can't find elsewhere. We're going to deliver to you right into your inbox.
Okay, so, and then are you going to lobby the SEC to open up to smaller investors? Like what
Expand those rules
I
and
know.
definitions.
Like, so rich people are getting richer, and I'm getting mad.
Yeah.
Well, so my idea is I think there should be a test. So you can either have a lot of money, or you can basically take a financial literacy test, and I've offered that to the SEC. In fact, we've offered to create it, and I think that will happen, but it's not going to be this year. It'll be brought some
Take
point
some
in the
time
future.
before that
Yeah,
goes.
I think so.
Okay, and then now before we let you go, the other great service that you do to the people here of Austin and South by Southwest visitors is this recovery house that we're in right now. How long have you been doing this?
So I'm actually a newbie to South by. So this is my first year.
Hey.
And so,
Welcome.
yes, and I'm having a blast already. And so, it's really kind of all about bringing together lots of great people. We have some really cool parties over the next couple of nights, and we've got free coffee and free drinks. So what else do you need?
Yeah, and I gotta say, Austin, wonderful town, not good coffee. So the fact that there's like blue bottle coffee here is saving
I
my
can
life.
also tell that this is your first South by Southwest. You're still cheery and chippy right now, but I think give it a couple more days.
Yeah.
The bags
The
under
bags,
the
yeah,
eyes are
right.
going to develop. You're going to start moping in like another interview. So we got you at a good time.
We did. That's
All
right.
right. Well, thanks a lot for your time, Barry.
Thank you, Barry. You can find all of the interviews that we did here at South by Southwest at cnettv.com. There's a lot more good stuff, so check it out.